Hello and welcome to Bloomberg Quint. Nifty reclaims that 10,000 mark after slipping below that level in today's trading session. Nifty bounced back and gained around 0.5% for the day, ending comfortably around that 10,000, above that 10,000 mark. Good set of numbers from HPCL lift the sentiment, though disappointment creeps in from M&M and our India earnings. To see how the large cap stocks have performed for the day, if you could look into the terminal here, you would see top gaining is India Oil Corporation, which has ended the day with gains of around 8%. Next in the list we have BPCL, yet another OMC making it to the list of gainers and ending the day with gains of around 5%. Vedanta too has ended the day with 3%. On the flip side, you have that Teva warning actually weighing on all the pharmaceuticals counters, be it Tata, be it Dr. Reddy, Aurobindo Pharma, Sun Pharmaceutical Industries. They've all ended the day with losses of around 1 to 3%, Jayesh, for that matter.
Right, Nikki. With that, let's introduce our guest, Mr. Raja Venkatraman, Chief Technical Analyst at Chart Advice. Mandatory chart check on the broader indices. Your pick, Nifty above 10,000, Nifty Bank above 25,000.
Yes, they are definitely on the cards because Nifty did not look to have too much pressure on the downside, because key levels are around 9980 to 10,000. That was a key support area, and from there Nifty has rebounded quite well, and it was actually looking towards the Bank Nifty for some support, and looking at the RBI policy which produced a pullback, and it actually offered a good way to enter the markets again. And from a move about 25,000 will augment good moves in the Bank Nifty, and that would actually impact the Nifty as well. So looking at the future prospects for the Bank Nifty, another rate cut is not seemingly possible by the end of this year. So that is a good trigger for the banks, and that is actually propelling all the finance stocks, all the associated stocks like auto, realty, and that is what is triggering a sharp move in the Nifty as well. And that's what we saw at the end of the day today.
OMCs have clearly had a good run and the last laugh in this week. IOC, for that matter, has gained around 10% for the week. Your view on this particular counter as well as the whole space?
Correct. IOC has got broad prospects. One of the main reasons is the crude oil. Crude oil has been a very important trigger for the OMCs, and if you look at the chart of crude oil, it has a very interesting comparison to the OMCs, and crude oil looks to set for more higher gains. That's what is our analysis is saying. And looking at the crude oil charts, we look somewhere in the region of 53, which would translate on the commodity markets. It's a very good play for the commodity space, where they could actually look for a trade in crude oil, where you could see the targets towards 3600. So that's a good prospect for the crude oil, so which automatically translates to the associated sectors like the OMCs. And HP is another counter which we have shortlisted, and it's already run up quite a bit, but then at every pullback it's a good buy, and IOC is also looking quite positive. So both IOC and HP are the two bright prospects in the oil marketing space.
Yes, HPCL, we saw them report numbers today, and the stock ended the day with 10% gains. But staying on with results, we have seen disappointing results from all tire counters, be it CEAT or MRF, declined today, and CEAT has been on a declining spree. Their margins reported, I believe, was about lowest in the last 5 to 7 quarters, something. Do you think this dip can be used as a very good buying opportunity for some of these tire counters?
Yes, one of the main reasons is that the price correction is always a good point to enter, and another aiding factor is the anti-dumping duty which has been recently imposed. So all that could culminate into a good buying point, because these stocks are good in the long run, and every good pullback in a stock is worth buying. So these stocks are definitely should be considered.
Rajat, the other question, you just said that price correction actually makes for a good entry point.
Correct.
Do you feel the same for pharmaceutical space, given how the pharma index as a whole has been performing past few consecutive sessions? Your view, anything that you like in this space?
Yeah, there I would like to state the contrary. Pharmas are facing headwinds from the US, and the regular crackdown by the US FDA is breathing down on the Indian pharma companies. Their policies are getting stringent, and like you can see today, Biocon, they also had a similar issue popping up. So these are, unless all these issues get ironed out, pharma is not something which one should look for buying in. And in fact, every rally is a sell opportunity, and we are continuously advocating pharma as a sell trade.
Sure. I was just picking up from what Nikki just mentioned in the Nifty gainers and losers. So NTPC was one of the top gainers today, while Tata Power was one of the top losers today. Is there a fair trade that you're looking over there?
No, both are operating in isolation, so a pair trade would not be advisable.
So, but individual trades on NTPC or Tata Power?
NTPC is much better than Tata Power.
So cement space also has had a good run in this week. Also the numbers have been looking attractive, be it in terms of volume despite the GST destocking happening. Fundamentally though, the valuations look a little lofty, but technically how does it look?
Technically it looks very good, and the recent GST norms which have actually benefited the cement companies from their logistics point of view is actually helping the cement counter shape up. And from the cement pack, we have ACC and India Cements, which has got very, very bright prospects because they are heading to a new high. So one should actually look at ACC and India Cements as a trading or an investment perspective.
All right.
Sure. Before moving ahead, let's just address how the mid-cap space closed. Well, as far as the broader index was concerned, the Nifty 500, it was a tug of war between the bulls and the bears till about 2:30, 3 p.m. But in late trade, we saw them surging, and the advanced decline actually shifted in the favor of the advancing stocks. So if you have a look at the individual performers, we had the likes of Unitech gaining 10%, Titan yet another counter on the back of results gaining more than 9%. HPCL we spoke extensively about, ended the day with 9% gains. M&M gained about 7% odd. While on the losers, we had HDIL decline as much as 9%. CEAT also we spoke about, ended the day with 8.5% red, and Century Plyboards ended the day with 5% losses. Mr. Venkatraman, Titan, yet another stock, surprise on the results front. Has there a long trade opened up on the charts?
Definitely. It was a long trade above around 600, and sharp move seen today, it has really widened the scope. It was actually oscillating around the 560 to 580 levels where it had some struggle. And now, since this move has happened, it has opened up bright prospects. And the other thing is the FMCG sector is getting good response from the GST, and the improvement in the gold space has also added to the Titan jewelry, which is what is added to the Titan's profit, which is almost double. That's the reason for the sharp move in Titan, and one could definitely look at that.
So my next question precisely was towards the FMCG index. The index as a whole has not done well for the week. We've seen some losses coming in on this particular index. However, ITC has taken the major beating. However, some amount of good gains have been seen by Emami and HUL for the week. Your views on the same?
Yeah, so between Emami and HUL, I would prefer HUL because HUL has come up afresh, and the new moves which we saw today definitely is an invitation for us to go long in the next week. And look, and again FMCG has been benefited by the GST impact, and the sustained move in this sector would look to continue, and one could see more rises in HUL. So one should actually look at HUL as part of the trading or investing pattern for the next week.
Sure. One last question from my end. Yesterday we saw Reliance hit a lifetime high after 9 odd years, and today there was some softness in prices. Your take on Reliance?
Reliance is pretty solid after almost a 2.5 years lull. It's moving quite a bit, but then at such high levels and with the weekly closing, so there was some profit booking actually which was getting immersed. Otherwise, Reliance is still good to go for another 200 points.
All right, sure. Thank you so much for taking the time out and speaking to Bloomberg Quint. We have come to the end of Market Wrap this Friday. You stay tuned into Bloomberg Quint for more, and for more stories, you can log on to bloombergquint.com.